Hello everyone, I hope you're well. This is our first podcast covering the cryptocurrency markets, and this is going to be the beginning of a series that we'll do every week, looking at some of the main stories around what's going on in cryptocurrency markets, and also just generally touching on interesting topics. So I hope you'll enjoy it and find it interesting, and obviously we'll be very grateful of any feedback that you might like to provide in terms of how we can improve things. Now, today for the first edition, we're going to look at three main things. The first is going to be a quick review of what's been going on with Bitcoin's price, and generally touching on the different influences and what we can maybe hope to see or expect to see next week. We'll then have a little look at Cardano, which I've been doing a little bit of work around that over the last couple of days and finding it very interesting. So I don't know how much you guys know about Cardano, but we'll be taking a little look at the trends there and explaining a little bit about the cryptocurrency itself. And finally, we'll have a little look at an interesting infographic that I came across in Forbes magazine, actually the Middle East version of the Forbes magazine, which looks at the average daily volatility of some of the major cryptocurrencies, which is obviously of interest to all of you who are trading cryptocurrencies. So first of all, we can see on the screen here we have the Bitcoin chart, and at the moment we're down at just under $11,000, and that's according to the CoinDesk data. Obviously there's a little bit of fluctuation between the different exchanges, but that's roughly about average with most of the main exchanges as CoinDesk tends to be. So we haven't seen huge drops this week, although we did obviously go back up to 13,000 earlier, and that's since declined down to around the 10,000 mark, between 10 and 11,000, 11,500. Obviously, the main news weighing on Bitcoin at the moment and the cryptocurrencies market more generally has been the move by the South Korean government to prepare a bill which, if passed, would effectively shut down the country's cryptocurrency exchanges. Now, Korea has a particular influence on the Bitcoin market because it has the highest concentration of Bitcoin investors anywhere in the world. And it looks like we've been seeing a lot of those guys cashing in their Bitcoin holdings in nervousness about potentially not being able to access them in the future, or maybe being difficult to sell. And China's also come out recently and said that it's expected that they're going to cut off the internet access in China to foreign crypto exchanges. Now, China, of course, shut down their own crypto exchanges at the end of December, and a lot of the Chinese moved over to South Korean exchanges, not only, but a big percentage of them. So the danger that South Korea might follow suit is obviously weighing also on the Chinese market. However, the good news is we seem to be seeing strong resistance around the 10,000 level, and any time Bitcoin breaks below that, it's moving back up again. Obviously, there's a buying on the dips tendency going on here, and the amount of resistance that 10,000 is providing is suggesting that we might have a return to a bull tendency, possibly over the weekend next week. Momentum is a little bit weak, but a lot of analysts are saying that the fact that 10,000 is holding is a good sign. I tend to agree, and hopefully we'll see a return towards the 12, 13,000 area over the next few days. So that's obviously one to keep an eye on. Now, moving on to Cardano. As some of you may know, Cardano was actually launched just at the very end of September last year, so it's only really been trading since the beginning of October. Now, Cardano's founder is a gentleman named Charles Hoskinson, and Charles Hoskinson was one of the co-founders of Ethereum, and he subsequently left Ethereum as a result of disagreements over policy and philosophy going forward, and he moved to set up Cardano, and he did that in conjunction with some of the brightest minds in academia and finance, both in blockchain and in regulation. And the interesting thing about Cardano is that it's being dubbed the first third generation cryptocurrency, and that claim is being made on the basis of its underlying technology, which is seeking to both combine the strengths of the most popular cryptocurrencies and also tackle some of their weaknesses and just have a much more flexible, powerful underlying blockchain technology. So the Cardano is trying to be a store of value like Bitcoin. It's also replicating Litecoin's fast, efficient, cheap peer-to-peer processing. It's got a smart contracts functionality like Ethereum, and it also has ambitions to be a settlement system within the financial services sphere, much like Ripple, but also to have the potential to do lots of other nifty things within finance. And markets seem to, I actually forgot to switch charts here, I'm sorry about that, but no harm done at the moment, as we haven't started to look at prices. This is the chart for Cardano for this week. Now, Cardano started off October at around 3.5 cents, and if you thought the trajectory of Bitcoin was spectacular from November to the 20,000 high touched in December, then Cardano was many times more spectacular, and that went right up to $1.24 around the same time as Bitcoin peaked. Now, as you can see in the chart here, that subsequently dipped to around 62 cents, in line with the general cryptocurrencies market tendency. However, from launching at the end of September, Cardano is now 5th in the list of cryptocurrencies by market capitalization. And there seems to be a huge amount of faith that this cryptocurrency is going to deliver on the promises that, or the ambitions that the people behind it have. And I don't think we've ever seen anything even close to that kind of level of traction to move from being brand new to getting into the top 5 market capitalization within essentially October, November, December, and it was already there by the beginning of January, so within 3 months. So personally, I really think that this is one to keep an eye on, do a little bit of research yourselves, but it's one that I'm very interested in, and certainly one I've added to my portfolio. We've seen this week a nice little bump up towards today over the last couple of days, and if we do get a bull market in the wider cryptocurrency market next week, I would expect Cardano to be one of the major beneficiaries. And just to wrap up, if we move on to this this infographic that I found in Forbes today, actually, and this is a very nice little visualization of the volatility levels that we can see among the biggest cryptocurrencies by market capitalization. And we can see that although Bitcoin is obviously very volatile, within the top several cryptocurrencies, it's actually down near the bottom of that volatility scale at just over 5.07% average daily swing. And we can see Cardano right up at the top there at 11.59%. It's slightly ironic considering that Cardano has been positioned as a cryptocurrency that is hoped to bring stability to cryptocurrency markets. However, that's obviously a result of its very fast traction at the moment, and the guys behind Cardano will obviously be happy about that, but not expecting that to continue in coming years after that initial burst dies down. And we can see Ethereum down at the bottom there with less than 5% of volatility on average per day. And that's obviously one of the major influences on cryptocurrency volatility is the liquidity in the individual markets. Now, while Bitcoin has the highest market capitalization, Ethereum actually has many, many times more daily transactions. They have, I think it's something like 90 million now, and it's, but basically the Ethereum has more daily transactions in the next top six cryptocurrencies combined, and that includes Bitcoin. So that depth of market and the liquidity in Ethereum is obviously contributing to its still very volatile, obviously, but it's slightly higher level of stability. So that's something that all of you guys who are trading cryptocurrencies should keep an eye on, because obviously there's benefits and disadvantages to higher volatility. So you can keep an eye on that and see what volatility has been like over the last couple of weeks or few months. These particular figures are based on average daily volatility over the past 3 months. Okay, so that's all we have time for today. I hope it was interesting for you, and obviously give us a shout if there's any particular topics you'd like us to cover in future or to reflect on, and wishing you all happy trading. Bye for now.